Select 50 Fund Focus. With me in the studio today is George Cheveley, co-manager of Investec Global Gold. George, now gold has shone since the start of the year, there's no doubt about that. Investec Global Gold sounds like you're perfectly positioned to take advantage of that. How is the fund set up? How do you run it?
Well, the Investec Global Gold Fund has been investing for 25 years in global gold companies. The two managers, myself and Henri Rousseau, the other co-manager, we both have mining backgrounds. We worked in the industry for a number of years and have huge experience in the industry. In addition to that, we have a very disciplined process where we model companies bottom up, and therefore between the two we have the flexibility to invest in what is a very fast-moving environment, but we also have the discipline to make sure we get our risks right when we're investing in these companies.
So you're predominantly looking at companies that are gold miners though, as opposed to, say, physical gold?
Yes, we invest in gold companies. We can, however, invest in ETFs which invest in physical gold, so we can get exposure to that and other precious metals. And if we want to, we can invest up to a third of the fund in other mining companies outside of the precious metals mining companies.
Right. So how do you go about selecting the stocks that you'll choose for the fund?
Yeah, we do a very detailed process where we analyse the companies bottom up. Mining is very capitally intensive. People invest a lot of capital. So what we focus on is companies who have made good returns on that capital, in other words, spent their money wisely and generate a lot of cash. And those are some of the key metrics we focus on. We also focus on the management teams. Have they delivered in the past? How good are they at doing their jobs? And those two we combine to really understand the companies. And then how much we invest in each company also depends on the macro environment. How positive we are on gold prices, what risks we see coming through, which parts of the world they're invested in, where their mines are. All of those risks we have to take into account as well.
So obviously gold's had a phenomenal rise so far this year. That wasn't the case, say, a year ago. What do you think are the sort of prospects going forward?
We're very bullish gold. We think we're at the start of a structural upcycle, bullish cycle for gold prices and gold companies. Generally these last 3 to 5 years, and we've only just begun, we think a number of things support gold prices and even will push them higher. One, we see the Fed still questioning whether they're going to raise rates or not, a lot of debate about that. But what we think the important point is we see the end point being lower than it used to be. We think there'll be less rate rises than we've seen in the past, and that will be help supporting gold. The other very important thing away from the US is currency devaluation. We experience it coming from South Africa, as our firm does. We've seen it in South Africa, but more importantly in China. People who cannot get money out of the country want to hedge against their devaluation, and therefore gold is a good way of doing that, and people want to buy gold as a safe haven. And finally, we just have to look at the political uncertainty. We have elections in the United States, France, Germany, Netherlands, all coming up in the next year. And clearly that will provide a lot of uncertainty in the markets, particularly after the UK's vote on Brexit. And therefore we see this as, again, a safe haven for people looking at other equity and bond markets where they see a lot of worries. Gold provides that diversifier for anybody's portfolio.
George, thank you very much.
Thank you.